It's once again results analysis that we are looking at, and the stock on our radar is KEI Industries. Chairman and Managing Director Anil Gupta joins us on the phone line to talk about the numbers. Can you first tell us what is the outlook for the coming year, Mr. Gupta? I'll just come to your numbers in a minute. Is it looking like you are getting more orders? Is 2019 generally looking like a better year in terms of sales? You've already seen about 2 months of the new year.
See, we have a very strong order book position. So I think what we have projected about the growth, we are on the track, and we see a bright financial year 2020 as well. So I feel that we will be able to achieve better than the projected figures or projected performance in this financial year.
Okay. Mr. Gupta, can you give us some sense on volume growth in the cable business, and sort of how that's playing out with margins? Because with some of your peers and rivals, what we've seen is while volumes are coming, there is some input cost pressure, and therefore margins are in question. What is the experience at KEI? We expect a better than volume growth and what we have projected, and we are sure that we will be able to maintain the margins as well. I know that there is a input cost pressure, but of late in last 3 months, some inputs have gone down as well, like plastics, polymers, steel, even copper and aluminium has also gone down. So, but the way we position our metal purchases, we do not lose on the metal purchases either on the upward trend, or we do not gain on the downward trend, because we are maintaining our inventories for our booked orders.
The reason for calling you, sir, is because we saw such a good performance from a company like Havells. So it gave the impression that the industry generally is doing very well. Your previous guidance was an 18 to 20% revenue growth. Will you do better than that?
Yes, as I said in the beginning, that we should be able to achieve better than the guidance what we have given in the beginning of the year or in our previous conference call.
But just coming back to the margin question, since you just highlighted a couple of commodities where there's a price deflation, does that mean you'll retain margins at around 10%? Is there any possibility that for the year as a whole you might actually improve margin?
I think we should be able to improve margins a little bit. But I mean, I cannot speak because this is our board meeting is shortly coming in next 8-10 days. So, but as I said, generally we will be able to achieve better than the projected results.
Okay, so can you say second half looked better than you thought? Yes. Because your first half was very good. You did show 33% more because of a low base. Will second half also be as good or better?
No, definitely it will be as good as and better than the first half.
All right. We'll leave it at that, sir. In 8 to 10 days, you have your results, so you won't be able to tell us much. But thank you very much for joining us with a qualitative view on the second half. Havells already indicated that that business is growing well, and maybe, therefore, the entire complex of cables and wires should do well. Let's wait and see. With that, let's go into F&O.
Absolutely. We have Manoj Muralidharan of Religare Securities now joining in with a couple of F&O trading calls. Manoj, let's start with the first trade. What are you going with? Is it a stock or the index?
Shurvi, good morning. It would be the index. Now, ideally, I guess the last fortnight almost the Nifty has been in the range of 10,800 to 11,000. But if you see the FIR data of day before, there was a good index option buying of an 1860 odd crores. Now, that buying is the squaring off of the put writing, which was giving support to the market. So we believe that the downside is open. The Nifty might take a support now at 10,600. The call writing is still intact. So 11,050 to 10,600 is the range. A better strategy here is, I guess, SGX is around 30 points positive. So once the gap up opening happens, the resistance might be intraday somewhere close to 10,920. So short at those levels, stop loss of 10,980. And as I said, the first target would be 10,750. And eventually, it is a great possibility that 31st, that is this expiry, we might be in the vicinity of a 10,650 to 700. The same goes with the Bank Nifty as well. It's a weekly expiry for Bank Nifty, so we would recommend shorting that as well at 27,400 to 420 is the weighted average price of distribution. Let's say 100 points more on the upside as a stop loss, and 27,100 is the target. Or you simply buy a 27,200 put, but try to buy it between a 10 to 12 rupees. No stop loss. Wait till end of the day. The target should be a good 48 to 62 on that.
Okay, very good. Manoj, you have a pick ITC?
Absolutely, Lata. I guess this stock, the 40 odd points in the stock is a good level to enter and exit, because 280 to 320 is the range. I guess it spent maximum time, and we are seeing the weighted average price of buying is somewhere close to 278. So buy at those levels, keep a stop loss of 6 more points as downside, and we're expecting at least a bounce in 290 to 294, where again it can be a trading bounce. You can book your profits on that.
Okay, all right, Manoj, we'll leave it on that note. Thank you very much for joining in and giving us a couple of those trading ideas. Let's now move on. Ajay Singh, the chairman and managing director of SpiceJet, feels that there is a need for airfares to go higher in India. He, however, feels that Indigo, the market leader, should take the lead and increase fares. This is coming after a quarter where we've already seen ticket prices move northwards. Take a look.
I think there is no great slowdown in the number of passengers flying. In fact, we found that as you start new flights to new destinations where there have been no flights in the past, you seem to fill them up pretty quickly. So the underlying demand is extremely strong. I think the issue really is in the yield. We need to make sure that we take up average fares.
But in a competitive market where, it's the airlines that are actually discounting and deep discounting, how does one see yields moving higher?
So, today the average fare between Delhi and Mumbai is 4,000 rupees. We are absolutely confident that if you move this up by 10% and start charging 4,400...
Who's going to take the first move?
It has to be the market leader. It has to be the company that has 42% of the market
So your
share.
message is to Rahul Bhatia and Indigo?
Absolutely. They need to take up yields, and everybody will follow. And I can tell you that there will be nothing, there will be no impact whatsoever on the demand of aviation in India.
Do you have any indication that we're headed in that direction?
So let me say that I think that through 2019, the capacity addition in India will be somewhat moderate. The reason for that is that, with the problems happening at Jet and at Air India, there is going to be no capacity addition. If anything, there's probably going to be a reduction in capacity for both those airlines. Some of the Airbus carriers are also having trouble with this Pratt & Whitney engine. And as a consequence, it's likely that there will be only a modest increase in capacity. So if the underlying demand remains strong and the capacity addition is moderate through 2019, we should be able to take up yields. So, the larger issues, of course, remain. We need to bring down cost of aviation. We need to bring down cost of airports. We need to bring down cost of, aviation turbine fuel. As you know, this issue of GST has been pending for a long time.
Yeah.
We pretty much have consensus on that now. The central government, most of the state governments are on board. We need to take it into the GST ambit. I think there are only 1 or 2 holdover states. And we need to work hard on them to make sure that they follow. And I think that's going to be easier to do after the election.
Okay, that's a lot of important voices coming in from Davos. And whether or not you speak about Indigo moving ahead, any debilitation from Jet will mean that these guys get more pricing power. So it's not something for good for us as consumers, but clearly for investors, this looks like music to their ears.